European stock markets, including the Stockholm Exchange, surged on Monday, offering investors a strong start to the week. Sweden's OMXSPI index climbed 2.8%, while the OMXS30 index rose by 2.7%, lifted by gains across several large-cap companies. Among the top performers were Hexagon and Sinch, both recovering with over 6% gains after recent losses. Hexagon notably rebounded from a 10% fall last Friday, triggered by a profit warning. Ericsson, ahead of its Q1 earnings report on Tuesday, also saw strong momentum with a 4% rise, joined by NIBE, SEB, and Handelsbanken. In the real estate sector, Quorum Property Group jumped over 11% despite weaker earnings, after announcing plans to sell at least 5 billion SEK worth of properties, potentially including parts of its U.S. portfolio. Fellow real estate firm Fabege posted a modest 0.7% increase amid falling rents and earnings. Meanwhile, the digital magazine platform Readly soared nearly 90% after majority owner Bonnier News renewed efforts to take the company private. Despite positive European sentiment, U.S. markets cooled off after a strong start. Early gains on Wall Street, driven by optimism around President Trump's temporary exemption of smartphones and laptops from high import tariffs, faded by late afternoon. The S&P 500 held on to a 0.3% gain. Dow Jones rose 0.2%, while the Nasdaq flattened after an initial 2% surge. Apple's stock, which jumped nearly 7% after the tariff news, closed with a more modest 2% gain. Other tech giants such as Nvidia, Amazon, Meta, and Tesla all closed lower, with losses over 2%. On the positive side, Goldman Sachs reported stronger than expected Q1 earnings, pushing its shares up 1.6%. However, sentiment was weighed down by new inflation data showing that U.S. household expectations rose to 3.6% for the next year, up from 3.1%. In the luxury sector, LVMH, Moet Hennessy Louis Vuitton, reported a disappointing Q1 with a 3% drop in organic revenue. The fashion segment, its largest division, saw a 5% sales decline, far below expectations. The company's U.S.-listed shares dropped 7%, raising broader concerns for the luxury sector, where several analysts expect flat growth throughout 2025. Monday's market performance reflects a push-and-pull dynamic between short-term optimism and broader macroeconomic headwinds. The Stockholm Exchange enjoyed a strong bounce, driven largely by relief over Trump's tariff exception and localized gains in tech and banking. However, the quick reversal seen on Wall Street underlines persistent investor anxiety, particularly around inflation and mixed corporate earnings. While isolated strong reports like Goldman Sachs offer glimmers of hope, tech volatility and weak consumer signals, like those from LVMH, suggest uncertainty remains high. Looking ahead, markets are likely to remain sensitive to trade policy changes, inflation data, and central bank signals. Investors should brace for continued volatility. Rallies like Monday's may be fleeting in the face of underlying structural pressures.